Hello everyone, I am Ankit and you're watching StudyIQ IAS English channel. Now in our today's video, we'll be dealing with a very important topic of economy known as economic capital framework. And if you look at the newspapers these days, you will find an article saying that the Central Board of RBI has actually reviewed the economic capital framework and accordingly it will decide how much amount of profit it should transfer to the union government. Now, when I looked at the other videos that were available on YouTube on economic capital framework, I was surprised to know that there were no videos that dealt with this issue in detail and with particular good facts. So I decided to take this topic myself. So after watching this video, rest assured, if a question appears in prelims or mains exam of UPSC, you'll be able to solve it comfortably, right? But first, let us start with our today's discussion. Now, if you look at the context of our today's discussion, you'll find that the Central Board of Directors of the India's Central Bank, that is Reserve Bank of India, they met 2 days before in Mumbai and they decided to review the economic capital framework of the central bank. Now, this economic capital framework is what RBI utilizes to decide how much amount of profit it should transfer to the union government. But then you may ask, why is actually RBI giving money to union government? My answer would be to that query is that companies, private companies for that matter, whenever they earn profit, they transfer a portion of this profit to their shareholders, which are the part owners of the company, right? And this is called as a dividend. Similarly, RBI is an agency which is owned 100% by Government of India. So whatever profit RBI is making, automatically a portion of that profit will be transferred to its ultimate owner, that is Government of India, right? So this is why RBI is transferring its profit to Government of India. And how much profit should it give? It is determined by the economic capital framework. So in that regard, before understanding economic capital framework, let us understand what are the sources of income for RBI, right? Because only after understanding the sources of income, then only we'll be able to understand now how RBI makes profit. Now RBI has many assets. You understand, for any bank or any financial institution, there are two types of things known as assets, which allows that institution to make money, and liabilities, which allows that institution to take money and they have to return back that money. That is why it is called as liability. Let us deal with the sources of income for RBI. Now RBI has large amount of gold in its foreign reserve, right? More than 700 tons of gold. So automatically, if the price of that gold increases, the value of the gold with RBI increases. So this is one source of income, that is appreciation or rise in the price of gold. Also, in a foreign exchange reserve, RBI holds a large majority of foreign currency assets. These might be US dollars, these might be pound sterling, these might be Japanese yen, this might be euro, or even other important foreign currencies. So suppose whenever the value of dollar increases, automatically the amount of foreign currency exchange reserve, its value in rupee, it automatically increases. So this is also a source of income for the RBI. Similarly, RBI is known as what? It is known as banker to the government. And how government take loans? They issue government securities. And in return, government also decides to provide interest rates on these government securities. So whatever government security RBI is holding, it is making interest income from that. This is also a source of income. Similarly, the money it extends to other governments like central and state government. This also allows RBI to make what? Interest income. Similarly, RBI is also known as what? It is known as banker to the banks. Also, when banks take loan from RBI under repo rate, they provide them repo rate worth of interest. So this is what is source of income from RBI, that is from appreciation in the value of gold, appreciation in the value of foreign currency assets, interest income from government securities, from loans it gives to central government and state government, and the loans it extends to banks. So these are the sources of income from the RBI. Now whatever income the RBI makes, then from that income it spends that portion of income to meet its operational expenses, right? What are operational expenses for RBI? This includes printing of notes, this includes salaries, this includes pensions of the employees of RBI. Similarly, they have to provide tea and coffee to also the employees. These are also included in operational expenses. So all of this spending is done from the RBI from its income, and we minus operational expenses from the income. And after we minus operational expenses from with income, we get what is net profit. Okay. So this is how RBI makes money every year. That is, it is having various sources of income, and from that income it has to minus certain operational expenses, that is printing of notes, salaries and pension of its employees, tea, coffee, etc. that is provided in the office. All of this they have to minus it, and then RBI has the left out money, that is known as net profit. Now whether this entire net profit should be transferred to government or not, this is incorrect. I'll tell you the difference why. Now let me give you a very simple example that you need to understand the difference between realized profit and unrealized profit, right? So let us understand the difference of these two terms first, then only you'll understand how much profit should RBI give to the government. Now suppose if you go and decide to buy a house, right? And suppose that house costed you rupees 50 lakhs. Okay. Now after you bought that house, you decided to make money out of this investment, right? So what you did, you decided to put this house on a rent. So you sought a tenant, and that tenant agreed you to pay 20,000 rupees per month worth of rent. So what is your yearly income out of this rent? It is rupees 2.4 lakhs every year, right? Now suppose in 1 year's period of time, the property rates in the area where you have bought in the house, it increased. So now after 1 year, the value of this house which you purchased for 50 lakh, it increased to 55 lakh. But you have still not deciding to sell this house in the market, rather you decide that I'll continue to make money out of this rent. Now this rent, which is 20,000 rupees every month, that amounts to 2.4 lakh rupees every year, it is transferred to your bank account, or it is being provided to you in form of cash. So this is what is realized profit. So realized profit is the profit that you have in your hand or that you have in your bank account. Now I told you, although the price of your house in the market increased, but you decided not to sell this house, right? So this increase in 5 lakh rupees worth of profit, which you haven't realized in the market, it is called as unrealized profit. And you will not realize this profit unless you decide to sell this house in the market, right? So this is called as unrealized profit, and the rental income that you were getting, which you are getting in your hand in form of cash or in your bank account, this is the realized profit. Understood the difference now? Similarly, what if RBI holds a large amount of gold and it does not decide to sell gold in the market? Automatically, if the price of gold increases, so its notional value also, the size of deposit that RBI has in form of gold, the value also increases. But what if RBI does not decide to sell this gold in the market? So this will become unrealized profit, right? Similarly, if RBI has large portion of foreign currency reserve like dollars, like pound, like yen, like euro, and it does not decide to sell in the market, that also portion of it might become unrealized. But regardless of the fact, interest income is coming to the RBI in its own account, because it has extended loans to government, it has extended loans to the banks, and they have to pay interest rates periodically. So this is an example of realized income, right? I hope you have understood the difference between realized and unrealized income now. Now let us understand how the portion of profits are divided. I'll tell you the difference between unrealized and realized. Now, economic capital framework is basically the formula or the methodology using which RBI determines how much amount of money it should keep aside as risk provisions, and then the rest of profit which it is given to the union government as dividend, and this is done under section 47 of the RBI Act. So as per this section 47 of the RBI Act, central bank, that is RBI, it is required to make provisions for bad and doubtful debt, for depreciation in asset and contribution to staff. That is basically for emergency purposes. RBI needs to keep certain money of its profit aside called as provision, and the rest amount it should transfer it to the central bank as a part of its profit. And the formula of how much amount of money it should keep aside as provision is decided by the economic capital framework, and it is economic capital framework based on which RBI transfers dividend to the government every year. Understood? Economic capital framework. Now automatically, if you are government, automatically you will want RBI to send all of its profit, right? Because you want money. Government has many obligations like welfare schemes, like infrastructure creation, and for all of that you require money. But will RBI as an autonomous institution give every profit to the government? The answer is no. RBI needs to keep a sizable portion of its profit aside as provision requirement. So how much provision should RBI keep? That was decided by ECF. Now there was this big issue in 2015s, 2016s when Urjit Patel was the governor. Government had a lot of obligations of spending money, right? So it wanted RBI to give all of its profits to government, but automatically RBI did not want it to give all of its profit. It had many requirements like provisioning. So this issue became a big issue. So to sort this issue, the RBI formed an expert committee under the chairmanship of former RBI governor Mr. Bimal Jalan, and they will be provide a new formula based on which the RBI will make allocations to the government in form of profit. And this was called as a Economic Framework Capital Committee. Now this committee gave its recommendation to RBI in August 2019 and it was accepted by the government. So what this committee told RBI, let us understand this. Now this committee said that RBI's profit needs to be categorized into two different accounts, that is realized profit and unrealized profit. I have already told you the difference between these two terms. Understood? So these two segregation needs to be done in form of RBI profit. That some of the unrealized profit, that is the increase in value of gold which RBI has not sold in the market, or increase in value of foreign currency which it has not sold in the market, these will be unrealized profit. And whatever money RBI makes in form of its account or in form of cash, that will be called as realized profit, like interest income, like some of the foreign currency or gold if it decides to sell in the market, that is realized profit. And only a portion of realized profit will be transferred to the government, right? And reserves of RBI will be categorized into two different reserves. These will be called as Contingency Risk Buffer and Revaluation Reserve. Now, how would money be added to these kind of reserves? That is, realized profit will be transferred to Contingency Risk Buffer and unrealized profit will be added to Revaluation Reserve. So this was what was suggested by the Bimal Jalan committee. It gave many other suggestions. Let us look at this. You understood this? First was distinction between realized and unrealized profit. Then was forming two different accounts, CRB and RR. And in CRB will add realized profit, and in RR, that is revaluation reserve, will add unrealized profit. Now another suggestion that Bimal Jalan committee made, that RBI will transfer surplus of its profit to the government from its profit after setting aside some money in the contingency risk buffer, right? Now contingency risk buffer is basically a buffer for RBI which it uses in a financial instability crisis to make our economy more stable. And it is because RBI has the responsibility also as a lender of last resort. So what if NPA levels in the bank increase and RBI does not have the money to lend it to banks? So in that case, it needs certain amount of cash reserve with it, and that is called as contingency risk buffer. So RBI will, some part of its profit, RBI will need to transfer to CRB, and rest amount of its profit it will be given to government. So how much amount of money or what percentage of its profit should be given to CRB, that is also suggested by Bimal Jalan committee. Bimal Jalan committee said that RBI's contingency risk buffer should be maintained in a range of 5.5 to 6.5% of total central bank's assets. Understood? So the portion of profit that RBI needs to give to CRB is on the range between 5.5 to 6.5% of bank asset. So how it means? Let me give you with a very simple example. So suppose in a particular year, RBI had assets of 100 crore rupees. So this is assets of RBI. Now using this asset, RBI made a realized profit of 10 crore rupees. So this is realized profit. Okay. Now suppose in that very year, the CRB, existing CRB of RBI was how much? Rupees 3.5 crore. But we have understood from this slide, the CRB needs to be maintained at what? Between 5.5 to 6.5% level, okay? So suppose, theoretically speaking, RBI decided that it will maintain CRB at the levels of 6.5% of its assets. So how much CRB should RBI have in case if it is making or it is having an asset of 100 crore rupees? Here the CRB needs to be 6.5 crore rupees. But it has how much CRB? 3.5 crore rupees. So from its realized profit, it will add 3 crore rupees more to its CRB, then only it will become 6.5 crore rupees. And how much realized profit will be left after transferring 3 crore rupees to CRB? It will be left out with 7 crore rupees profit. And this 7 crore will be given to government as what? Dividend. Understood? Any doubt? So let me be clear again. 100 crore rupees was the asset of RBI in a particular year, and using those assets, RBI made a realized profit of 10 crore rupees. Now in that particular year, RBI saw that its CRB was at 3.5 crore rupees, but RBI needs to maintain CRB at 6.5 crore rupees. So that means it needs to add 3 crore rupees more to make it 6.5 crore rupees. So it adds from 10 crore rupees, it transfers 3 crores to CRB. So the rest amount, that is 7 crore, will be transferred to government as a dividend. So this is what was suggested by the Bimal Jalan committee, that CRB needs to be maintained between 5.5 to 6.5%. That depends upon RBI's decision, and the rest amount of money will be transferred to government as its profit. Now let us see what has been the recent trends in profit. Now it is expected that this year, that is in the last financial year 2024-25, RBI made a lot of money due to sale of dollars to curb volatility in the rupee. As we saw, rupee was getting depreciated. So RBI had no other option but to sell dollars in the market to increase the supply of dollars. So automatically, if RBI would have purchased those dollars at 60 rupees per dollar, now it is selling them at 80-85 rupees per dollar. It is making 20-25 rupees for every dollar. So this is a realized profit RBI must be making. Similarly, there is a sharp rise in gold prices due to global conflicts, and if RBI is not selling those gold, automatically it might lead to what? Unrealized profit. Similarly, there is also appreciation in the prices of government securities held by RBI. So these might lead to many realized and unrealized profit, and it is expected that RBI has made so much profit that it is going to transfer 2.5 to 3 lakh crore rupees to the government this year, which, if it will happen, it will become the highest record dividend transfer by the RBI to government ever. And the last record was in the last financial year in 2023 and 24, where RBI transferred 2.1 lakh crore rupees to the government of India. So if these figures are true, the last year's record will be broken in this year's dividend transfer. Now I have also added a graph here. So this is the graph which tells you the trend of RBI's transfer to the government. You can see highest transfer before 2022 and 23 was in financial year 2019, where RBI transferred close to 1.76 lakh crore rupees, and this was after implementation of Bimal Jalan committee report, right? After that it has become varied, and the last 2 years, that is in last year it was 2.11 lakh crore, and this year it is expected that RBI will transfer between 2.5 to 3 lakh crore rupees. Now I hope I have made economic capital framework clear to you all. If it is clear to you all, let's see if you are able to solve this particular practice question. Now please solve this particular practice question. Do not forget to let me know the correct answer in the comment section. And also, what do you feel about this economic capital framework? Is it enough for RBI to maintain a good contingency risk buffer, or should RBI needs to give less amount of money to government and keep more reserve? What do you think about this issue? Please do let me know in the comment section. And if you want to download these notes, these will be available in the channel called as ATS Live, which you can search on Telegram. Also, you can scan the QR code. This will take you directly to my channel. And I hope this video helps you understand ECF better. And this is a very important concept, so please do not ignore it, okay? So I'll see you again tomorrow at 9. Please have a very good night.